What do the BRICS nations and you, the American citizen, have in common? Once you strip out all the government data and rhetoric, the actual lived experience of everyday Americans dealing with true inflation is troubling. The intent to exit the highly inflated, faith-based fiat dollar is clear. Saudi Arabia, among many other nations, have already signaled their intent to join the BRICS alliance. This member alone will challenge the USD's 50-year record as the petrodollar. Fortunately, this change will be gradual, which buys time for the ordinary investor. To help make sense of this present economic environment, we will hear from macro analyst and investor Lyn Alden, economist and investor Keith Weiner, investment advisor and fund manager Marc Faber, and former U.S. Congressman and author Ron Paul.
After all these many years of great success, our dollar dominance is coming to an end. It has been said rightly that he who holds the gold makes the rules. That general rule has held fast throughout the ages. When gold was used and the rules protected honest commerce, productive nations thrived. Today, the principles are the same, but the process is quite different. Gold is no longer a currency of the realm. Paper is. The truth now is he who prints the money makes the rules, at least for the time being. Although gold is not used, the goals are the same. Compel foreign countries to produce and subsidize the country with military superiority and control over the monetary printing presses. Since printing paper money is nothing short of counterfeiting, the issuer of the international currency must always be the country with the military might to guarantee control over the system.
And what's interesting is it shows how powerful network effects are, because he's talking back in 2006 about dollar hegemony coming to an end. And here we are, 17 years later. These things are not quick changes, but that some of these decisions to do actions very much are likely tied to the United States' desire to maintain the global reach that it has with its currency, so that it can sanction any of these supply lines that it wants to, and so that it builds in that monetary premium for its currency by having every country want to hold, as much as possible on their reserve balance sheets. But I think going forward, we're entering a more multipolar world, either where you have separate currency blocks. So, for example, the yuan becomes the currency of choice in Asia, for example, while the dollar holds, much of the rest of the region, the world, basically split into 2 or 3 different major currency blocks. We're also seeing gold a little bit more emphasized in the core of the system. If you look at BRICS nations and BRICS and allies, they've been not really accumulating treasuries of the past decade, but they have been accumulating gold, and so that's been kind of a preference among a lot of them.
And Secretary Connolly said, well, it's our dollar, but it's your problem. But as to least dirty shirt in the laundry, so yes, number one, I do think that as badly as the U.S. government has abused its credit, by and large, the other governments of the world, and certainly most notably China, has abused its credit even worse. But the other point that I think needs to be made more often is that all the other currencies of the world, maybe with the exception of, say, North Korea, like a couple of pariah countries, maybe Iran for that matter, but all the major currencies of the world are dollar derivatives. That is, the central banks hold dollars as their reserve asset, or they hold euros, and the European Central Bank holds dollars anyway. So they're dollar derivatives. And so they couldn't possibly survive if the dollar were to collapse first. They couldn't survive the collapse of it, because if you're derived from something and the thing from which you're derived is collapsing, you're going to go down too. It'd be like if you had call options on Google and then Google were to collapse. There's no way the call option would still have value after that.
The US, as you know, has a reserve currency. But increasingly now, we have countries that trade with each other outside of the US dollar. In other words, China purchases oil from Saudi Arabia. They can settle that in yuan or RMBs, or I suppose Saudi riyals. And I think the reason these countries do that increasingly is that the US froze the assets of different countries that they didn't like. So why would someone hold all his money in the US Federal Reserve System? In general, I think the world will evolve away from the US dollar over time, but it doesn't happen overnight. All currencies are bad. The question is, which one is the least bad? I would say, as an investor, you should have some money in bonds and cash and equities and so forth, but you should also have money in assets that you cannot multiply easily, such as precious metals. As an example, gold, silver, platinum, and young people, they prefer cryptocurrencies. But in my opinion, the cryptocurrency, the failure cryptocurrency is the following. Envision an emergency situation, like in Gaza. What happens? They switch off the electricity, they switch off communication, then try to go and pay something with cryptocurrency. No way! But if you have small denomination gold coins or silver coins, you can go anywhere in the world and someone will accept it.
How do you hedge against an ever-depreciating fiat dollar? Sound money. Sound money is built with assets that have scarcity, a long track record of trust and value, and cannot be printed by central banks. If you are interested in protecting your retirement savings and preserving your purchasing power through a tax-deferred gold IRA, see the links in the video description. To attend a free gold education webinar held by Augusta Precious Metals, see the link in the video description. Thank you for watching.